All right, folks, and we are back. Tax, and more tax. Guys, if you're looking at the tax paper that you've just given, I'm here to discuss the paper with you. Of course, I can't be live in front of you. So this recorded thing is what you need to watch. Of course, the solution is also shared with you. Don't worry about it. You have all the numbers with you, but I'm just trying to discuss the paper with you so that you have a good idea of what you wrote or what you didn't write in the paper. So let's see. This is an entire full portions test number one. If you've scored well, great. If you've not scored well, do not worry, guys. The idea is to prepare. The idea is not to ace this exam. ICAI exam is what you need to ace, and for which we have good amount of time. This is the May 23 preparation, and this is something that you should be watching. The other students also, whoever needs the test, get in touch with me on my details, and I will send you the test paper as well. So here we go. Let me just start and share with you the test. 1 minute. Full portion test. Here is the question paper on the screen coming up in just a second. I hope all of you all are good. By the way, guys, my name is Saurabh Mutha, and I'm here to simplify tax for you to a large extent. So I hope you have access to my drives, to my books, to my notes, to my quick book, to my revision videos. I hope you're watching all of them. So here we go. Discussing this paper that just happened. You've just written it. Let's discuss. All right, zooming in, guys. This was a 3-hour paper, 100-mark paper, exactly modeled on ICAI paper, 3 hours, 100 marks. This is for the year 23-24, assessment year, of course, financial year 22-23. Let's see, guys, here. There's Raj, who commenced operations of a business of a 3-star hotel in Mumbai on 1st April 2022. Guys, if you didn't realize 3-star hotel is a specified business, of course, they will give it here. He incurred certain capital expenditure of 90 lakh on land. Guys, capital expenditure means you are special, but unfortunately for land, you don't get any deduction. So sorry, Raj, this you will not get a deduction. He capitalized the same in the books of accounts on 1st April 2022. He inaugurated the hotel. Congratulations. I hope he called some really big star to inaugurate the 5 or 3-star hotel. Further, during the year, he incurred capital expenditure of 2.5 crore, out of which 1 crore was acquisition of land and 1.5 crore was acquisition of building exclusively for the above business. Again, guys, for land you will not get, but 1.5 crore rupee deduction you will definitely get under a section called 35AD because you are special, if you remember our discussion. Guys, all these discussions are best dealt in a class. So full-fledged class you have to attend, and then all these shortcuts become very easy. The profits from the business of the hotel before claiming this deduction was 75 lakh. So in your PGBP, you will open the room PGBP and you will take 75 lakh as the income minus 1.5 crore. So 75 lakh is the loss for the year in the head PGBP. Of course, this loss from specified business can only be set off from another specified business profit only. His brother Viraj, he's the brother of Raj, has commenced the business of manufacture of apparel like clothes, shirt like this. I think it's nice. It's one of my favorites. On the 1st of October 2022. He employed 220 people. Wow, that means a big factory. During the year, the details of which are as under. So he has employed 40, 80, 50, 30, and 20 people at different stages in October, November, and December. Some of them are regular. Regular basically means they participate in the Provident Fund, and casual people do not participate in the Provident Fund. The profits and gains derived from manufacture of apparel that year is 80 lakhs. So I'm writing here PGBP room opened here also for Viraj, which is 80 lakhs. And his total turnover is 11 crore. That means he's a big guy. He's subject to audit because you remember, guys, anyone who is more than 1 crore 10 crore is subject to audit. Based on the facts of the case, choose the most appropriate answer to the following questions. Let's see what this is. Assuming Mr. Raj has fulfilled all the conditions of claim of deduction under 35 AD and has not claimed any deduction under Chapter 6A under the heading deduction with respect to certain incomes, what would be the quantum of deduction under 35 AD? The right answer is 150 lakhs. So this is the right answer. Moving ahead, assuming that Raj also has another business of running a 4-star hotel, hotel, guys, good, in Ahmedabad, which commenced operation 20 years back. Doesn't matter, even if it's 20 years back, it's still a specified business. So can I minus it? Yes, the profits are 130 lakh from the Ahmedabad hotel. The loss is 75 lakh from this hotel. So 130 minus 75 is 55 lakhs of profit. So answer is B, 55 lakhs. If out of the amount of 1 crore paid for the acquisition of land in the year 20 to 23, 50 lakh was paid by way of cash, what would be the answer to 1 and 2? Guys, anyways, on land, you don't get any deduction. You don't even get depreciation. So even if for land you paid in cash, there is no difference. Answers would still be the same. 150 lakh in the first case and 55 lakh in the second case. All right. Moving ahead, considering the assumption given in question number 2, which is talking about the Ahmedabad hotel, what would be the tax payable rounded off by Mr. Raj for the year, ignoring alternate minimum tax? So guys, he has two hotels. One has a loss of 75 lakh. One has a profit of 130 lakh. So overall, that is 55 lakh. He is Raj, assuming he is less than 60 years of age. So let's calculate his basic tax up to 2.5 lakh rupees 0. Then 12,500. Then 1 lakh. And then on 45 lakh at 30% is 13 lakh 50,000. Let's total it up. 13 lakh 50 plus 112,500. His basic tax will be 14 lakh 62,500. Obviously, because his income is more than 55 lakh, he'll pay a surcharge of 10%. So I'm straight away multiplying this by 10% into 110%. It's basically 16 lakh 8,750. And of course, there's surcharge and there's cess always of 4%. So into 104%. So 16 lakh 73,100. This is your answer of tax payable. So answer is A. This is the tax payable. Of course, if there's alternate minimum tax, then you would start off with 55 lakh and you would add the deduction of 1 crore 50 lakh. You will add that back and then you would do a recalculation. All right. Would Mr. Viraj be eligible for deduction under 80 JJA? Guys, job, add. If you remember that. In job, add. Will he get deduction? Yes. First, of course, you should be auditable. You should be contributing to the PF. You should not be paying in cash. The salary should not be more than 25,000 and they should be employed for 240 days in a year. But remember, if you're in the LAF industry, leather, apparel and footwear, then for 150 days you should be employed. Let's see what all conditions he's fulfilling. Guys, if he engages someone in October, so October, November, December, Jan, Feb, March, 6 months into 30 days is roughly 180. So this one is being fulfilled. This one is being fulfilled. November, December, Jan, Feb, March, 5 months into 30. Again, this one also and this one is being fulfilled. But this one anyways is not being fulfilled because of number of days. All right. Now, among the ones which are fulfilled, this one we will not be able to take because it's more than 25,000. Also because it's casual. The other three we can take. So we have to multiply 40 employees into how many months? October, November, December, Jan, Feb, March, 6 months into 24,000. So I'm doing it 24,000 into 6 into 40 is basically 57 lakh 60,000. Next, 80 into again 6 months into 24,500. 80 into 6 into 24,500 is 1 crore 17 lakh 60,000. And next is 30. So 30 into 5 into 25,000 is okay. More than 25,000 is a problem. 37 lakh 50,000. Add all these up, 1 crore 1760 plus 5760, and the total is 2 crore 12 lakh 70,000, and we get 30% of this. So let's calculate 30% of this is 63 lakh 81,000. So the answer is 63 lakh 81,000. Will he get a deduction? Yes. All right, no working notes, nothing required, guys. That is 10 marks, 5 questions into 2 marks. That is 10 marks, which you just scored. Let's move ahead. Let's see what the next question is talking about. Guys, here Mr. Ashish's total income comprises of long-term capital gain on sale of land, 5 lakhs. So I'm just writing it here. Long-term capital gain, which is 5 lakh. Obviously, this is taxed at 20% if you remember, but I'm not writing that right now. I'm just calculating total income. Short-term capital gain on sale of listed shares. So this is short-term capital gain, which is 2 lakhs. So 5 plus 2 is 7. He won a lottery. So casual income, congratulations to Ashish. He won 1 lakh rupee lottery. And he has saving bank interest of 30,000 rupees. So what is his gross total income? Let's calculate. 5 plus 2, 7, 8 lakh 30,000 is his gross total income. There's some problem with my nib, so it's coming a little teda-meda, a little cursive like your personalities. But let's come back. So gross total income is 8 lakh 30. Now he invests 1.5 lakh in PPF. So in 80C, you can take a deduction of 1 lakh 50,000 plus saving bank interest, and his age is 40 years. So section 80 TTA, if you remember, 10,000. So you can take a deduction of 1 lakh 60,000. But unfortunately, if you remember the available GTI, guys, if you remember CC, capital gain, this one, the first one, the second one and the third one are not available to minus any deduction. So only 30,000 you can minus. So I'll minus only 30,000. That leaves me with 8 lakh of total income. Now I have to calculate the tax, his tax liability. But because I have CC income, I have to make a menu card. If you remember 1, 2, 3, 4, and 5. First one is normal rates, then is 20%, then is 15%, then is 10%, and then is 30% casual income. Let's put 1 lakh rupees here, casual income. Interest income is gone. Short-term capital gain is 2 lakhs. So can I take 2 lakh? Here is 2 lakh. This is not there. 20, this is 5 lakh. And normal rate, there is nothing. So it's only 5 lakh, 2 lakh, and 1 lakh. So 5 lakh into 20% is 1 lakh. I'm just putting it into a box. 2 lakh into 15% is 30,000. And 1 lakh into 30% is again 30,000. So that is 1,60,000. Obviously, because his total income is not more than those limits, he's not subject to surcharge. So only into 104%. So 1,66,400. This is your right answer. Congratulations, 12 marks in your kitty. All right. You can just pause it here in case you want any further explanations. Moving ahead. Now, to who among the following will qualify as a non-resident? Guys, we are moving ahead to more MCQs. Let's see who among the following will qualify as a non-resident. First, Mr. Bob, an Italian dancer, Fancy, came on a visit to India to explore the Indian dance on 15 September 2022 and left on 25th December 2022. For the past 4 years, he had visited India on dance competition and stayed in India for 120 days each year. Basic condition 1, stay in India greater than or equal to 182 days. Let's say stay in India. September 15th he came to India. I have to include that day. So 30 minus 15 plus 1 is 16 days in September. October, November, and December 25th. Let's add up 16 plus 31 plus 30 plus 25. 102 days in the year. So this condition is not fulfilled. But we'll go to basic condition 2. Stay in India greater than or equal to 60 days. Yes. And stay in India in the last 4 years greater than or equal to 365 days. Yes to both. So he basically becomes a resident. Sorry, Bob, you're not a non-resident, unfortunately. Samrat. The next one, Samrat is born and settled in USA. So he must be called Sam or something in US. He visits India each year for 100 days to meet his parents and grandparents who are born in India. So basically, Samrat is a person of Indian origin. He comes to India for 100 days. So basic condition 1 will not apply, will fulfill. Basic condition 2, although will be fulfilled, but he is not applicable because, guys, this condition does not apply to two people, employment and visiting. He is not under employment, but he's an Indian citizen or PIO visiting India. So this condition will not apply. So Samrat, you are a non-resident. Mr. Joseph, an American scientist, left India to his home country to fix employment there. He stayed in India for study and research in medicines from 1st January 2018 to 1st July 2022. So in India this year, how many days? Let's see, till July he was in India. So April 30 days, May 31, June, and 1 day of July. So 92 days. Basic condition 1 does not fulfill. Basic condition 2, the first part greater than or equal to 60 days fulfilled. And last 4 years also is fulfilling. So he is also a resident. So the only answer is Mr. Samrat, who is the only non-resident among these people. Guys, imagine how the question is, Joseph and Bob sound like non-residents, but they are residents. And Samrat sounds like an Indian, but he is a non-resident. So don't get fooled in the exam. This is again 2 marks. Next one. Mr. Harish is an interior decorator declaring profits under 44 ADA in the previous year and the earlier previous years. Basically means 44 ADA is only applicable to those people whose turnover is up to 50 lakhs in case of profession. So he's a small individual, guys. Think about Harish as small in height. No, actually don't think like that, but he's a small individual. Mr. Harish has to pay a brokerage of 15 lakh to Mr. Patel. TDS provisions they are demanding. So who's the payer? Harish is the payer. He is paying to Mr. Patel. Brokerage basically means section 194H helper, but this section does not apply to a small individual, small HUF. So this one will not apply. And he also pays 50 lakh to Mr. Suresh, a contractor for reconstruction of residential house. Again, that is section 194C. Again, it does not apply to small individual. So let's check the section which apply to small individuals. 194M. But those will apply only if the amounts are more than 50 lakhs. This one is to one person, this one is to the other person, and hence it's not more than 50 lakh. And 194IB, impossible to buy. That section does not apply because that section is about paying rent of more than 50,000 a month. So no TDS provisions are not attracted in the hands of Mr. Harish in respect of payments to Patel and Suresh is the right answer. Congratulations. Question number 4 done and dusted. Moving ahead, Mr. Akash is constructing a residential house property in Patna for self-occupation. Wow, wow. Very good. Akash is going and making a house in Patna. You should also, guys, someday in life make a house. Of course, in Bombay, we don't construct it, but he is doing that. He has taken a loan of 40 lakhs. Now, the year is very important. Which year is this? This is the year 2021 where he has taken the loan. He pays interest of 2.5 lakhs in that year. So he's paying interest in the year 21-22. He's paying interest. He repays some principal also in this year only. So here he's paying interest also, repaying principal also. The construction is completed in May 22. Basically, the next year the construction is completed. The stamp value of the house is 46 lakh. This is the only house property of Mr. Akash for the year previous year 21-22. Mr. Akash is entitled to deduction of 2 lakh. Is very, very nice question. Although you might be wondering how much deduction, but remember your deductions will only start once your house is completed. They are not talking about this year. They are talking about this year where your house is under construction. So this year you're not eligible for 24 section also, for 80 EA also, and for principal under 80C also. Remember guys, all these deductions, whether it is interest under 24B, whether it is principal under 80C, or whether it is easy EMI, again, all these three sections, your deductions you will get only when you start paying. Here you haven't started paying. So unfortunately, this is not the right answer. Neither is this, neither is this. Answer D is the right answer. That is question number 5. Now guys, I'm just going to take a small detour. I'm just going to discuss the MCQs in the GST part also, and then we'll move ahead to the descriptive questions. Let's get to GST, guys. Again, the MCQs of GST, 12 marks. Let's see how they go. That's the most appropriate answer. The best part of MCQs is no explanation required, but of course, you should have the right understanding. Sarabhai and Sarabhai Associates, a partnership firm. Remember, each word is important. Highlight the important words. Registered, so it's a partnership firm. Registered under GST, is engaged in various types of business activities. So it's a business entity. Provide the details of the following activities undertaken by it in the current financial year. It's a big question, so I'm just going to see the questions. What has they asked you? Value of supply. There is one question on value of supply. There is one question on time of supply. There is one question on value of outward supply payable under reverse charge, and some free gifts, whether it's considered a supply or not, and input tax credit in the month of December. Let's see. So ideally, if you have a little idea, it gets very easy to solve the question. So just scroll through the questions, not in great detail, but just overall so you know where to focus on. It supplies taxable goods to Dhanush Enterprises at a price of 8 lakh in the month of April with a credit period of 1 month for payment. So you supplied something to Dhanush. So this is Sarabhai and Sarabhai. I don't know if you've seen their popular serial, Sarabhai and Sarabhai. But anyways, Sarabhai and Sarabhai, they sold something for 8 lakh rupees with a 1 month credit period. Thereafter, interest thereafter. So after 1 month, interest at the rate of 12% per annum is chargeable on the consideration. The payment is received from Dhanush Enterprises after a lapse of 2 months from the date of supply. So is Dhanush late? Yes. Let's go to the question, guys. Find out the value of supply made to Dhanush Enterprises. The value of supply will obviously be 8 lakh. That is the transaction value plus interest. Will you add? Yes, you will add interest. Now, what amount will you add? So on 8 lakh, of course, at 12%, but how many months you will add? Not 2 months, guys, because you are given a credit period of 1 month. You were late by 1 more month. So only divide by 12 into 1, basically 8,000 rupees of interest you will add. Again, I repeat, it's not 2 months interest, only 1 month, because 1 month was the credit period and you paid after that for delayed by 1 month. So the overall delay was only 1 month. Will you add this? Yes. So 8 lakh 8,000 is the value of supply on which there will be GST. So answer is here 8 lakh 8,000. Answer is B. Moving to the next one. In the month of October, it provides services by way of transportation of goods in a goods carriage by road to Fisheries Department of Government of India. So basically now it has become GTA. It is supplying some services. Registered under GST for the purpose of deducting taxes also and not making any taxable supply. Sarabhai and Associates is a registered good transport agency and charges 1 lakh 12 for the said services. So will 1 lakh 20,000 be a taxable supply? Yes. There's no question on that. We'll see ahead. Sorry, I missed one question at the top here, second one. Let's see the second one. It enters into a contract for supply of office chairs at 15,000 with Ashoka Mart. So it is basically supplying some chairs now, this time to Ashoka Mart on 21st August. Chairs are removed from the warehouse of Sarabhai and Sarabhai Associates on 5th September along with the invoice of the said date. Ashoka Mart has paid 30% of the total contract value on 21st August and balance 70% is paid after delivery on 10th September. Guys, this is time of supply question. Let's see. The question is time of supply for advance money and for the balance payment. Remember guys, time of supply, the section is 12 and because it's FCM, section is 12.2. I demand payment. I'll give you a shortcut, ignore payment. So what is the invoice date? The invoice date is 5th September. And what is the due date of invoice? The due date for goods is whenever they remove. So again, that is 5th September. So the answer is 5th September for the first amount. And for the second also it's the same because guys, in case of goods, payment is to be ignored. So for both the answers, time of supply is 5th September. So D is the right answer. Is very, very valuable shortcuts that we have in time of supply. Third one we had discussed, it's general supply. It also provides services of direct selling agent. Guys, Sarabhai and Sarabhai is a partnership firm. It is providing direct selling agent services to an NBFC. Remember, direct selling agent generally is under RCM. That means government wants GST, but they tell the NBFC to pay. But only if the direct selling agent is an individual. Here, it's a partnership firm. So this is under FCM. This one also was under FCM. All right, next. It organizes a business exhibition in the month of December for which it receives a sponsorship fee of 3 lakh from Dhara. So they basically are giving sponsorship services to Dhara. Now guys, is sponsorship services under RCM? Yes, but only if Dhara is a company or a partnership firm, LLP. Yes. So this one is under RCM. Just one second. Next, guys, it provides free gifts to each employees having 50,000 at the end of each financial year. Guys, remember, free supply is also taxable. There's a schedule called Schedule 1, which says that related agent imported BA. So if you're giving something to a related person free of cost, that is also supply. But the same schedule says that if you're giving it to an employer is giving it to an employee up to 50,000, this is not supply. So this one is not taxable as per Schedule 1. It avails services of Dhruv Travel Agency for organizing a free vacation for its top performing employees. Basically, this is something that they are getting inwards, availing. So they're purchasing. Will you get credit of travel for employees? No, it is blocked. If you remember the section 17.5b, if you don't remember, no problem. This doesn't have to remember any section. Anyways, MCQs. GST of 50,000 is paid to the same, but sorry, 50,000, no credit for that. It also pays GST on 20,000 of membership of the Rudraj Fitness Center. Even that purchase, there is no ITC. So ITC in these two is nothing. All right, so let's see. First one we've already done. Second one we've already done. Determine the value of outward supply under reverse charge. Only one is under reverse charge, which is basically the sponsorship fee is under reverse charge of 3 lakhs. So answer is this. Free gifts of 50,000 is not a supply as per Schedule 1 and is eligible to claim input tax credit of how much? The answer is nil. So excellent. 5 questions into 2 marks, 10 marks is done. As MCQs can be very valuable to clear your exams if you do them really well. But don't worry, if MCQs are difficult, the descriptive you'll make up for it. ITC on dash is not blocked. Trucks purchased by a company for transportation of finished goods, this is not blocked. Aircraft for official use is blocked. General insurance taken on car used by employees is blocked. Car purchase for official use by employees is blocked. So the answer is A, only the first one. This is the MCQ part, guys. Now we'll be moving ahead for the descriptive part, again first in DT and then in GST. So watch out. I'll be discussing now the descriptive part. I hope you're understanding it. This video is so that you don't have to read and you can watch the video and discuss your answers as well. Moving ahead to the descriptive parts next. So let's move now to the test descriptive questions, guys. In the exam, descriptive questions can get difficult. Do not worry. Steps ke marks milte hain. You will get marks for the steps. So do not worry too much. As long as you're going ahead in the right direction, you'll be good to go. So I'm just talking about yesterday's test. Just opening it up. 1 minute. This is the full portion test, the test questions. I'll also be sharing the test answers with you in the same link, so you can access it as well. Here we go. Let's start with the DT part and then move to the GST part. So these are some things that we did yesterday. All these MCQs we had done yesterday, and now we're going to the descriptive questions. Let's see, guys, what this is. Mr. Anmol, who's 67 years old. Of course, it's a big question, so I'm going to go straight to the bottom and see, compute the total income and tax payable by Mr. Anmol, assuming he does not opt for 115 BSc. The new scheme we don't have to take, you have to take the old scheme. So let's see here. He's 67 years old. So imagine he's a senior citizen. He will get a basic exemption limit of 3 lakh. Keep it in mind. He's a manufacturer, so he'll get additional depreciation. Keep that in mind. He has reported a profit of 3 crore something something. And this profit is after debiting or crediting the following items. So they've already done something like this. So I'm opening the PGBP room. And in the PGBP room, I'm writing 3 crore 95 lakh 11,290. Debits 15,000 paid to a Gurudwara registered under 80G of the Income Tax Act in cash. Sorry, this is not allowed for two reasons. One, this is not allowed in PGBP. It is a 80G deduction. So anyways, I have to add it back. And in 80G, will I get a deduction? No, we'll have to write a note because it is paid in cash. You will not get any deduction. So this one is done. Every step you move ahead, you get marks. 35,500 contributed to a university approved and notified under 3512 to be used for scientific research. Do I get a deduction? Yes. Have I already taken it? Yes. What is the impact? Nothing. You just have to not pay attention to every detail here. Some details are right. You don't have to, sorry, you have to pay attention, but you don't have to do anything about this because this is right. Interest paid rupees 1,75,000 on loan taken for purchase of e-vehicle on 15 July 2021. Sorry, this should be 2022 from the bank. The e-vehicle was purchased for the personal use of the wife. So can you minus it in PGBP first? It's not a business expense. You have to add it here. And can I take it under 80 EEB? Yes, you can take it under 80 EEB, but the maximum amount you can take it is 1.5 lakhs. So there I've written it here in the corner. He had purchased timber under a forest lease of 25 lakhs for the purpose of business. He's a manufacturer. So can he purchase timber? Yes. But remember guys, in TCS, whenever there is a seller who's selling timber, he has to deduct 2.5% of this 25 lakh into 2.5%. He has to collect extra. That is 62,500. This guy, whatever is his name, has paid extra. So his name is Anmol. So in TCS, in the end, you'll have to take a credit of 62,500. All right, let's go ahead. Credits. Income of 3,50,000 from royalty on patent registered under the Patent Act received from different resident clients. No TDS was needed to be deducted by any of the clients. This 3,50,000 you've taken under PGBP. I would ideally take it under IFOS. So they've added it. I'm removing it. 3,50,000. And I'm taking under IFOS. I'm making the IFOS room here. 3,50,000. But remember, you will need a deduction here under section 80 QQ. Sorry, not QQ. It's not a book. It's just a patent. So 80 RRB. So how much we'll have to see, but right now I'm just parking that thought here that it is 80 RRB. Just one moment. 80 RRB. Maximum is 3 lakh. We'll see what is the deduction which we get. Next, he received 3 lakhs from a debtor, which was written off as bad debt in the year 1718. A couple of years back, there was someone who's not paying you 3 lakhs. So you wanted to write that off as a bad debt. Amount due from the debtor which was written off was 4 lakh. Actually, the person who was not paying you was not paying you 4 lakh, but the officer allowed only 2,50,000. So you wanted a 4 lakh deduction, but the officer said, no, sorry, you will get only 2.5 lakh deduction. So basically your 1.5 lakhs was already taxed in that year. Yes. Now that he's paying you 3 lakh rupees, what you have done is you added the entire 3 lakh, which is wrong. So you have to minus the 3 lakh first. You can also do the net amount, but I always like to do the full amount. So this 3 lakh addition is wrong. So I minused it. And how much should you add? You should only add 1,50,000. I will repeat this once again. In a couple of years back, you wanted a 4 lakh rupees bad debt reduction. You did not get, you got only 2.5 lakh deduction. So 1.5 lakh is basically something that was already taxed in that year because they did not give you that bad debt deduction. Now that that person is paying you 3 lakh rupees, out of that 1.5 lakh is already taxed. So now you have taxed only 1.5, but you have taxed already 3. So first you have to reverse that and then add 1.5. He sold some goods to his brother for 6 lakh. The fair market value of such goods was 9 lakhs. Guys, in expense, any unreasonable expense, just one moment. All right. So guys, selling goods to the brother doesn't matter. The only thing is if there is unreasonable or unnecessary or excess expenditure, that is a problem. So this is on the income side, so that is not a problem. So here, do we have any adjustments? No, we don't have any adjustments. Moving ahead to other information. depreciation in the books of accounts is computed by applying the rates prescribed under the Income Tax Act. So what they are saying is the books of accounts and the income tax law, the depreciation is the same. So that is good. Anmol purchased a new car for 14 lakh rupees on the 1st of August 2022, and the same was put to use in the business. No depreciation for the same has been taken. So here you have to take the depreciation. So 14 lakh into 15% for the whole year, 2 lakh 10,000. You'll have to minus depreciation 2 lakh 10,000. But remember, whenever you buy a fancy car, on that there is also TCS at 1%. So 14,000 would have been paid by you, and that is TCS. So this is 14,000. Moving ahead to the next one. Mr. Anmol had sold a house on 25th March 2022. That is last year, guys. 21-22, you sold a house and deposited the long-term capital gain of 20 lakh in the capital gain account scheme by the return filing due date of that year. So 20 lakh is in your capital gain account scheme. You have to invest it further if you want an exemption. On 11 March 2023, that means in this year, 22-23, he sold another house property in which he resided for 1 crore. He earned a long-term capital gain of 55 lakhs. So total long-term capital gain is 75 lakhs. Now he has to invest it ahead within 2 years. He has to buy, or 3 years he has to construct. Now on 25th March 2023, that is within the same year, 22-23, he withdrew all the money and invested 1 crore construction of one house. So can I take an exemption of the entire amount? Yes. 20 lakh you had already taken, 50 lakh, 55 lakh also you can take. So what is in the capital gain? Nothing, guys. Capital gain this time will be 0. Mr. Anmol made the following payments during the year 22-23. Sorry, this is 22-23. Lump sum premium of 1 lakh 20. Just 1 second. All right, moving ahead. Lump sum payment of 1 lakh 20 paid during the year for medical policy taken for self and spouse. The policy shall be effective for 5 years from 30th March to 30th 29 March. So this 1 lakh 20, can I take a deduction under 80D? Yes, but not of 1 lakh 20 divided by 6. You remember, if it's 5 years, then you have to add 6 unless it is taken on 1st of April. So this is not taken on 1st of April. So divide by 6. So 80D deduction you will get. I'm writing it here where we've written all the sections. 80G, here I'm writing 80D, which is 20,000. Of course, he's 67 years old, so he has a limit of 50,000. Let's see if there's anything else. 8,000 paid in preventive health checkup for self and spouse in cash. So can I take 8,000? No, sorry, you can take only 5,000. Again, 80D, you can take 5,000. All right, this is the different rooms and the different adjustments. Only one thing we need to just remember, that here you have sold a house during the year for 55 lakh. Whenever you sell the house, there is a person who's a buyer. So here I'm talking about this. He sold another house property which I decided for 1 crore. So this house property, whenever you're the seller, this is Anmol, and there is a buyer. The buyer will deduct TDS at the rate of 1% and pay to the government. So on 1 crore, 1% will basically be 10,000 rupees. That will be paid under TDS. So just like we have 2 TCSs, we have 1 TDS also of 10,000 rupees, for which would have been deducted. So you will get a credit of that. Perfect. Compute the total income. So you will add these amounts, minus these amounts, get PGBP room, IFOS room you will get. You will get GTI. From GTI, you will get these 2 deductions. This will be a working note. This deduction you will get 80 RRB. You can get maximum of 3 lakh rupees. There's nothing of in India, outside India. You get maximum 3 lakh rupees. This is the TCS. And on the final amount, you will calculate tax up to 3 lakh rupees 0. 3 to 5, 5 to 10, 10 plus. If there is more than 50 lakh and stuff, you will have surcharge. And then says there is no casual income, there is no capital gain. So don't worry about the calculations. Very nice 14 mark sum, this one. I hope you understood it. If any questions, do let me know. This one it is. Moving ahead to question number 2A now. All right, moving to the next one. Very interesting question. Next one. This is similar to a question that has been already asked in the paper. So I hope if you've done previous year's papers, you can relate. Examine the tax implication of the following transaction. Akash is an Indian citizen, is a non-resident in India for the year 2022-23. He has been appointed by the government of India as an ambassador in Japan. So he is basically receiving salary. So from the government of India, the government of India is paying him salary for working abroad. Guys, he's a non-resident. So ideally, his salary, which is received in Japan, should not be taxed in India. But if you remember the section ISSD IRF gifts, in that 9.1 deemed income, and if you remember 9.13, his salary, we tax our people, so his salary will be taxed in India. But of course, the allowances are exempt under section 10(7). So you'll have to quote that as per section 9(1) or 9(1)(3), the salary will be taxable in India, deemed to accrue or rise in India, hence taxed in India. But the allowances will be exempt under the section called section 10(7). Anna is a non-resident in India, is engaged in the operations which are confined to purchase of goods for the purpose of export. She has earned 3,50,000 during the year. Guys, if you're having a business connection in India, India can tax you. But the concept of business connection, section 9(1)(1) says that the activity of purchase and export only is not considered as business connection. So all those people who are abroad, who just buy from India and they sell abroad, some spare parts, some things, etc. Example, Tommy Hilfiger, they buy buttons from India. All these activities will not make Tommy Hilfiger pay their tax in India because of this one activity. So this is not taxable because it's an exception to section 9(1)(1). Sumit is a non-resident in India. He has earned 4 lakh as royalty for a patent right made available to Mr. Vikas, who is also a non-resident. So one non-resident is giving another non-resident a patent. But then why is India so bothered? Because Mr. Vikas has utilized the patent for development of a product in India. This patent has been used in India. So if you come to India's kitchen and you use it, they say that ISSDIRF royalty 91123456 916 says that since it has been used in India, it will be taxed in India. How much will be taxed? The entire amount? Yes. Although only 50% royalty is received in India and 50% outside India, but received we will not see, because used in India, the entirely will be taxable. All right. Jimmy is an NRI, so there is one non-resident, and Naveen is also a non-resident. One non-resident is giving money to another non-resident, because why are we bothered then? Because that money has been invested in shares of an Indian company. So it has been used in India. Yes. Now, this case is ISSDI 915, but as per 915, if money has been given by one non-resident to another non-resident, then that interest will be deemed to be taxed in India only if it's used in India for business and profession. This is not business and profession. This is income generating activity. So this one will not be taxable in India. I hope this is understood. Moving ahead to the next one, that is question number 2B. 2B is a simple question on TDS provision. Let's see how this is to be solved. Sahil, a resident Indian individual, not deriving any income from business or profession, makes payments of 10 lakh. Basically, he is a small individual. He's making a payment of 10 lakhs in January 2023, 25 lakh in February 2023, and 25 lakh in March 2023 to Madan, a contractor, for reconstruction of residential house. So he's basically paying a contractor. Of course, 194C will not apply for small individual, but 194M will apply if the payments are more than 50 lakhs in a year. Are they more than 50 lakh? 25 plus 25 plus 10, yes. So on that 60 lakh, they will have to deduct TDS at the rate of 5% and pay to the government. Sahil, TDS will apply section 194M. XYZ Limited makes payment of 2 lakh to Ramesh, an individual transporter who owns 6 goods carriages throughout the previous year. So XYZ is making a payment to a contractor, 194C. But generally, a goods transport agent having up to 10 goods carriages, TDS will not apply if they give their PAN. But he has not furnished his PAN, and hence on this 2 lakh, TDS will be deducted. And hold your breath, not at 1 or 2%, but at 20% punishment rate. So these are the two TDS sections. State any 3 conditions when a person is required to furnish his income tax return in the prescribed form and manner on or before the due date, even if such person is not otherwise required to furnish a return. Guys, what are the 3 reasons? If you remember, you have to file your return. If your income is above a certain limits, companies and firms compulsory. And if you're not supposed to file, still you have to check for coffee. Do you remember this? You have to write any 3 reasons. You can write if deposits in the current account in the year are more than 1 crore. If foreign travel expenses for yourself or for any others is more than 2 lakhs, and if electricity expenses more than 1 lakh, then these are 3 reasons. They specifically ask for 3 conditions, so give them 3 conditions. All right. Moving on to the next question, question number 3A. Let's see what this question has in store. All right, let's move to the next question. Question number 3A. Mr. Suresh entered into agreement to sell his residential house property at New Delhi on the 25th of May 2022 for rupees 80 lakh. Mr. Mukesh handed over the possession of the property on 15 December 2022, and the registration process was completed on 14th of Feb 2023. So guys, who's the seller here? The seller is Suresh. We'll have to calculate ATPSC. ATPSC SC in his case. There are two dates here. One is the date of agreement, which is 25th May, and one is the date of registration, which is 14th February. Just 1 second. Now let's see how this works. So is there an asset which is being sold? Yes. Is it sold? Yes. Period of holding. Let's see, we haven't got the details of yet. Mr. Mukesh had paid the sale proceeds in the following manner: 25% through account pay check on the date of agreement. Congratulations, because you paid other than CBC, you can take the stamp duty value on the date of agreement in case there are more than one stamp duty value. 50% on the date of possession and balance after completion of the registration. The value determined by the stamp duty authority on the 25th May was 92 lakh, and on 14th Feb was 94 lakh 50. Which one will you want to take? You will want to take 92 lakh. But first we'll see. You are saying the sale consideration is 80 lakh. You will multiply this with 110%, that is 88 lakh. Is the stamp duty value within the range? No, stamp duty value is higher. So you will take sale consideration as 92 lakhs. So one thing is done, I put it in a box. Three things done. Mr. Suresh had acquired the property on 1st April 2001, many years back. So the period of holding is long term, and because of the cost will have to be indexed. For 21 lakhs, it was bought for 21 lakhs. After recovering the sale proceeds, he purchased another. So this has to be indexed, divide by 100 into 331. So this will also get you. So you will have to do 92 lakhs. There are no expenses on transfer. So you'll have to straight do index cost of acquisition, 21 lakh. Divide by 100 into 331 is basically 69 lakh 51,000 minus 92 lakh, which is basically 22 lakh 49,000. This was the long-term capital gain. But now who wants to pay tax? So is there a way to save it? Yes. He acquired another property in Kanpur for 22 lakhs. So can he do that? Yes. If it has acquired within a certain period, then you can take an exemption under section 54. And only 49,000 will be taxable as a long-term capital gain. Remember this, if they had asked tax, it would be taxed at a flat rate of 20%. Congratulations. But they've only asked till capital gain. Moving ahead, Mr. Raju furnishes the following particulars for the year 2022-23 in respect of an industrial undertaking established in an SEZ. Congratulations, guys. Raju is doing a special economic zone activity, that is awesome area. Compute the amount of deduction available under section 10AA. So first 10A deduction I have to calculate. 10A deduction, we will have to see export profits. That is the step one. Now step two, we'll have to see whether it's in the first 5 years, 100% next 5 years. So it began manufacturing in 2017. So 17-18 was the first year. 18-19, 19-20, 20-21, 21-22. These were the first 5 years, but we are in the next 5 years, 22-23. So it's in the 6th year, and hence you, whatever the export profits is, you will get 50% deduction. Let's calculate export percentage. Export sales proceeds received in India was 90 lakhs. Domestic sales was 80 lakhs. So totally it became 170 lakhs. Profit of the undertaking is 40 lakhs. So this percentage you have to find out into 40 lakhs, but guys, we have to wait. The export sales, guys, any FIT, freight, insurance and telecommunication charges has to be reduced. So freight and insurance of 10 lakhs for delivery of goods, they have to be reduced both from here also. So this will become 80 and this will become 160. So basically the percentage will become 50% of 40 lakhs, which is 20 lakhs. I repeat, guys, why did we take 80 and 160? Because this 10 lakh had to be reduced from both places. So I reduced it. So the export percentage is 50% into 40 lakhs, which is basically 20 lakhs. Now of this step 2, do we have to do 50%? Yes. So 50% of 20 lakhs is 10 lakhs. So the deduction under 10AA is only 10 lakhs. I hope this is understood. This one, moving ahead to some of the last few questions, guys. Your last 3-4 questions and then DT comes to an end. Mr. Koshi transferred 300 shares of Style Private Limited to Moksh on 10th of September 2022 for 3 lakh when the fair market value is 5 lakh. The index cost of acquisition of the shares for Mr. Koshi was computed as 4 lakh 45. The transfer was not subject to any STT. Basically, these are unlisted shares. Determine the income taxable in the hands of Koshi and Moksh. Guys, Koshi is the transferor. He is the person who's transferring. So in his hands, there will be capital gain. I'm writing A, T, P, S, C. Then we will go to Moksh. So first is A. Are you transferring an asset? Yes, unlisted shares. Are you selling them? Yes, you're transferring it. What is the period of holding? We don't know, but seems like long term because it's index cost. How much are you selling it for? You're selling it for 3 lakh rupees. But guys, if you remember BUD, building, unlisted shares, and determine, in this case, they will compare with the fair market value. The fair market value is 5 lakh. So they will take 5 lakh as the sale price. And your cost was 4 lakh 45. So now that I've got all the 5 boxes, my sale price is 5 lakh. My cost is 4 lakh 45. So basically 55,000 is my long-term capital gain. This is in the hands of Koshi. Now I'm changing the ink because I'm going to the next discussion. The next discussion is basically for Moksh. So guys, now Moksh, he is getting some shares and he is getting it at less than market price. He's getting it for 3 lakh when the market value is 5 lakh. So is there a benefit? Yes, there is a benefit of 2 lakhs. Now, step 1, is it MISB SATJOY? Yes, these are shares and securities. So yes. And step 3, if the benefit is more money, there will be no benefit. Mobile property, if it's more than 50,000, which it is, this 2 lakh will be taxed in the hands of Moksh. So yes, Moksh will be taxed on 2 lakhs under the head IFOS, gift taxation or benefit taxation. That's your question. Of course, this one again is based on an exam question. A lot of these questions are based on previous year's exam questions, guys. Moving ahead to the next one. Mr. Chetan is employed in a company with a taxable salary of 4 lakh. He received a cash gift of 1 lakh from a health charitable trust, which is registered. Is the cash gift so received from the trust chargeable to tax in the hands of Chetan? So guys, Chetan is getting some money. Step 1, is it MISB SATJOY? Yes. But step 2, if you receive it from a trust, etc., 1 lakh rupees, is it taxable? No. Step 2 says that this will not be taxed. So hence, under section 56 to 10, it is specifically said that any amount received from a registered charitable trust will not be subject to gift tax. So that is the concept here, guys. So that is the concept in this case. Let's move ahead to question number 4, which is the last question, by the way. Compute total income of Mr. Mihir for the year 23-24 from the following information furnished by him. So you will have to make, an arrow like this, like how we used to. So I'm just going to make it here. In rough, you'll have to make it. So let's make an arrow here. 1, 2, 3, 4, and 5. Let's see what are the different incomes. The first income is salary income, 4 lakh 70. So 4 lakh 70,000 is here. The next one is loss from self-occupied property, 2 lakh, loss from let out property, 80,000. So 2 lakh 80 I'm writing here is the loss from house property. Next, loss from speculation business X and speculation business Y, 90 and 80. So there is speculation business. There is 80,000 profit. And same speculation business, there is 90,000 loss. Can I set off one against the other? Unique blood, but they can be set off one against the other. Next, profit from that we've seen, income from trading and manufacturing business at 8% is 5 lakh 50. So this is normal business, 5 lakh 50. Interest on PPF deposit. So this will come here. Interest is 95,000, which is basically exempt. So I'm cancelling it. Next, long-term capital gain on sale of vacant site, 1 lakh 10. So this is long-term capital gain, 1 lakh 10,000. Short-term capital loss on sale of jewelry, short-term capital loss is 1 lakh 90. Investment in tax saver deposit is 50. Brought forward loss. Investment in tax saver deposit. Basically, this is a ATC deduction. So they've given you a small ATC deduction also because they were probably looking at GTI or TI. We'll see. Brought forward loss from business of assessment year. Previous year's brought forward loss. So this is normal business loss. 7 lakh 50. I'm putting a quarantine stamp here because you cannot go out with this. And enhanced compensation received from the government for compulsory acquisition of land. This is basically taxable in the year of receipt. under capital gain. So again, long-term capital gain is 4 lakhs. So here we go. These are all the different details. Just remember ATC and let's see what have they asked us to do. They have asked us to find out the total income. So hence they've given you a deduction as well, but no problem. Here we go. First, internally, we'll see within the family. This does not have anyone within the family. This, can I set off one? Yes. And this 10,000, what will happen? I'll just change my color here. This 10,000, what will happen to this loss? It's a unique loss and it will be carried forward. So I'm putting this as B and this is carried forward. And what about this 5 lakh 50? 2 lakh 50 will be the loss. And of course, it is a quarantine stamp. So even this will be carried forward. So here PGBP is completely done. Long-term capital gain, can I minus? Yes. Short-term capital gain I can minus. So 4 lakh plus 1 lakh 10 is 5 lakh 10 minus 1 lakh 90 is 3 lakh 20. This 3 lakh 20 is my long-term capital gain as of now. And here there is nothing. Now let's see the loss. Now I'm talking about a very important concept that I'm discussing with you. Can I take this house property loss and set off? Yes, house property is friendly, but it can go to any head. So it can go to salaries also. Yes, it can go to capital gain also. Yes, PGBP there's nothing. Interest there is nothing. So it can go to both the heads. Now typically, which one would you go to? You would go to salary only and you will minus 2 lakh because you can only take 2 lakhs. But guys, be the smart one. Salary can be taxed at slab rates. Here very carefully, this explanation, very important. Guys, salary is taxed at slab rates. So you can use your base exemption limit. Then from 2.5 to 5, from 5 to 10, these are different slab rates. So salary is taxed at low rates, whereas this long-term capital gain will be taxed at 20% flat after adjusting base exemption limit. So hence, it will be better to adjust this house property loss against long-term capital gain. I'll repeat this one last time. If you adjust it against salary also, no problem. But the better answer would be to adjust it against long-term capital gain and explain it against. Guys, you can minus either 2 lakhs from here or you can minus 2 lakhs from here. But which is the better option to do? I'll tell you the better option to do. In the exam, salary will be first used against base exemption limit and then will be taxed at base 5%, then 20% and then 30%. Whereas long-term capital gain, after using the base exemption limit, straight off it will be taxed at 20%. So hence it will be better to set it off against long-term capital gain. So hence this 2 lakh balance is 80,000, which of course will be carried forward. But this 2 lakh will be set off against this long-term capital gain. So this is 1 lakh 20 of long-term capital gain, which will be taxable. And here it is 4 lakh 70, which will be taxable. So this, everything is done here. So 1, 2, 3 things carried forward, 2 things which will be taxable, 4 lakh 70 and 1 lakh 20. When you add them up, it comes to 5 lakh 90. From this, can I take the reduction of ATC? Yes, 50,000 rupees, you can take a reduction. And once you take a deduction, 5 lakh 40,000 will be your answer on which you will have to calculate tax, but you don't have to because they've only asked for total income. Remember, this was only a small different thing on house property adjustment. Looking at this question, Mr. Raja gifted a sum of 8 lakh to his brother's minor son on the 14th of May 2022. On the same date, his brother gifted debentures worth 10 lakhs to his wife. So basically, Raja is gifting something to his brother's minor son, whereas the brother is gifting something to Raja's wife. So is this a cross transfer? Yes. Any transfer done at or about the same time with the intention to evade tax is called a cross transfer here. So the common amount is 8 lakh. On this 8 lakh, whatever income minor son is earning will be clubbed in the hands of his father, and whatever the wife is earning will be clubbed in the hands of Raja. Let's see. So son of Mr. Raja's brother invested the amount in fixed deposit of SBI 9%. So 8 lakh into 9%, and interest, and Mrs. Raja received interest of 81,000 on these debentures during the year. So 9% from this date, you'll have to see from this date, whatever is the amount will be clubbed in the hands of his father. But of course, after minusing exemption of 1,500. And what about the Raja and his wife? The wife was earned an interest of 81,000, but this is on 10 lakhs. So if on 81,000 is on 10 lakhs, what is on 8 lakhs, you'll have to do proportionate. So 8 lakh into 81,000 divided by 10 lakh is 64,800. This amount will be clubbed in the hands of Raja. So I repeat, guys, there will be cross transfer. It will be tax. But remember, cross transfer only works on a common amount of that 8 lakh rupees. All right, looking at the last question, an amount of 50,000 was paid to Rakesh for professional fees. Here, this is TDS. Very interesting question on TDS, the interest calculation. So an amount of 50,000 was paid to Mr. Rakesh on the 1st of September 2022 towards fees for professional services without deduction of TDS. So is there something wrong? Yes, you have not deducted. How much have you not deducted? You have not deducted 5,000 rupees because TDS is 10% under 194J. Subsequently, another payment of 60,000 was due to Mr. Rakesh on 31st Jan 2023, from which tax at 10% amounting to 11,000. Basically, it was finally deducted. This 5,000 was finally deducted on 31st Jan 2023. So it was finally deducted after a few months. This is September, October, November, December, and Jan. So there was a delay of 1, 2, 3, 4, 5 months delay on non-deduction of 5,000. Now this 11,000 was deducted in the month of Jan, should have been paid by 7th Feb, but this 11,000 was finally paid on 22nd July. So on this 11,000, there is non-payment. You should have paid in February, but you paid in July. So Feb, March, April, May, June, and July. 1, 2, 3, 4, 5, 6 months delay here, 5 months delay here. We'll have to calculate the interest. Let's see how the interest is calculated. On 5,000, 1% per month or part thereof, and into 5 months. Because why 5 months? Because it should have been deducted in the month of September. It is finally deducted in the month of Jan. So this 5,000 into 1% into 5 months, which is 250 rupees interest, will have to be paid. And on 11,000, at 1.5%, because you've deducted it but not paid. So 1.5% into 6 months. Why? Because when you deducted it in the month of Jan, should have paid it by Feb, but you paid it later. So 11,000 into 1.5% into 6 months, which is basically 990. This is the interest that you will have to pay under TDS section 2011. So this is DT part, guys. I hope this is understood well. If any doubts, you can reach out to me. Let's move now to the GST part. All right, let's do GST next. These are 40 marks, 12 marks MCQs, which we've already discussed. Now let's go to the main question, guys. This is Shresth Private Limited, is a registered supplier of goods and services in Kolkata. Has furnished the following information for the month of February. What have they asked? Compute the minimum amount of GST payable in cash by Shresth Private Limited. Let's see how we do this. So I'm going to make 2 columns here. One, I'm going to make the liability ledger, and one I'm going to make the credit ledger. So here we go. I'm going to be making one liability ledger, and one I'm going to be making the ITC or the credit ledger. Always start with I, C, and S. Here also I, C, and S. The opening balance is already given of ITC. IGST is 50,000. CGST is 57,000 and SGST is 0. Now let's see, whatever is the liabilities, we'll keep adding, and then we'll have to finally pay our electricity bills. If you've been my student regular one, you know what this is. All right. Intrastate supply of taxable goods. Intrastate, 4 lakh rupees you've supplied. So 4 lakh, and the GST rate generally is 99%. Unless otherwise mentioned, both inward and outward supply are exclusive of taxes. All the conditions for taking ITC have been fulfilled. The turnover Shresth was 2.5 crores in the previous financial year. So 99% on intrastate. So 4 lakh into 9%. First of all, supply leads to liability. So don't worry, just go to your liability ledger and add 36,000. Just 1 second. So 36,000 here and 36,000 here because it is intrastate supply. Moving back. Purchase of goods. So this is done. Purchase of goods destroyed due to fire. Purchase actually gets to credit. Purchase leads to credit. PC, Priyanka Chopra, if you remember, let's remember her right now. Due to fire being put out in the production process, but because it's been destroyed, sorry, you will not get any credit on this. So you will have to write a working note that this one, no credit because it has been blocked under section 17(5). If you remember, H happy, unhappy. This is also done. Let's go to the next one. Services provided to a foreign diplomatic mission located in India. It is an intra-state transaction. You have provided services to a foreign diplomatic mission. Remember, an exemption, if the foreign diplomatic mission provides services, it is exempt, but you are providing services, obviously, you will charge GST 1 lakh intra-state. So 99% is 9,000 and 9,000. This one is also done. Intrastate purchase. Now, purchase again leads to credit of 4 items for being served to customers free of cost. Guys, confectionery, food and beverage, this is also blocked under Section 17(5)(b). So, sorry on this, no credit. Again, working note that this has been blocked. Goods transport services received from a GTA. So, again, you purchase something. So, purchase should lead to credit. Purchase should lead to credit. GST payable is 5%. So, on 2 lakh, 5% interstate. So on 2 lakh, because it's not 18%, because on GST on this, they mentioned is 5%. So 2 lakh into 5%, 10,000. Thankfully, my first credit, IGST 10,000. But remember, guys, in GTA, RCM applies. So if you're the recipient and this is a GTA and he is charging GST at the rate of 5%, then you will have to pay this to the government. So this 10,000, of course, it's a purchase, so you will get credit. But instead of paying the GTA, you have to pay to the government. So this IGST you have to pay to the government. I'm just making a small bifurcation here because this RCM has to be paid only in cash. So I'm just making a small bifurcation. This 10,000 of IGST is RCM and has to be paid using the cash ledger. I repeat this one last time. So you've received some services from a GTA. Is this purchase? Yes, purchase leads to credit. So I put in the credit ledger here 10,000. But guys, this is also RCM. How do I know? Because it is 5%. It was 12% and it would be FCM. But because this is RCM, you have to pay to the government and hence this will also go into a liability ledger. Simple. Instead of paying the GTA, you are paying the government. Moving now ahead, this is also done. Interstate services provided. So it's a supply to Dhruv in respect of a business exhibition held in India. Guys, business exhibition held abroad is exempt, but business exhibition held in India is taxable. So 10,000 into interstate. So at the rate of 18%, so 1,800 rupees will be here. So I'm putting 1,800 rupees as a liability. Just 1 second. All right, so 1,800 rupees there. Interstate security services provided at Torrent High School, unregistered under GST for their annual day. Guys, generally, whenever a high school, this is a school, whenever they get TCS services, TCS, transportation, catering, and security in their school, then it is exempt. So you are providing it to Torrent High School. If this was a school, it would be exempt, but you're providing it outside the school campus. So this one is taxable. 15,000, it is interstate. So 15,000 again into 18% is 2,700. I hope you remembered why. If this was inside the school campus, this would be exempt. And inputs to be received in 3 lots. Again, this is purchase for credit, out of which the second lot was received during the month. So you will not get any credit. Why? Because this will be a working note. Because on this purchase, you haven't received the entire goods. So this is 60,000 of credit. This is 57,000 of credit. This is no credit. Now let's see how we pay. And let's see the liabilities, 2,700 plus 1,800. So 4,500 is the liability here. 36 plus 9, 45 is the liability here. And 45 is the liability here. First, now I'm changing the color. IGST credit is to be used. I'll use 60,000 to pay IGST. So 4,500. This is done. This tick mark is done. We need 3 tick marks. And out of this, 4,500 is done. So 60,000 minus 4,500 is 55,500. Now let's see who's needy. CGST bill is 45. They already have 57. So C is not needy. S unfortunately is needy because it requires 45. It has nothing. So I'll use the entire thing to pay 45 here. 45 gone from here. Is this done? Yes, this is done. Another tick mark. How much remains if you take 45,000 here? 10,500. Now at least can I use CGST? No. First you have to finish this IGST. So I'm going to use this 10,500. Is this over? Yes. So this is 10,500. 45,000 minus 10,500 is 34,500. Now you have to use this CGST, 34,500 and 34,500. So is this finally paid off? Yes. So 34,500 minus 57,000, which is basically 22,500. Can I use this to pay my RCM? Sorry, you cannot. RCM has to be paid in cash. So the answer will be cash has to be paid. IGST 10,000 has to be paid in cash, and this 22,000 will be carried forward. Guys, I hope this is 8 marks of good understanding. No matter how they give it, if you understand purchase and supply and you understand exempt taxable, you'll be okay. Any questions, reach out to me on this. Moving ahead to the next one. This next question is a very nice question on exempt supply. Determine the GST payable at 18% with respect to the following independent cases. Let's see the first case. Fees charged for Swasthya Yoga Camp conducted by Chandra Prakash Charitable Trust registered under Section 12AB. Guys, all these notifications, all these exemptions are under one notification only. So you can quote that. And this one will be exempt. Yoga camps are exempt for provided by charitable trust. Amount charged by business correspondents from wealthy banking company. This should be under RCM, but because it is rural branch, this one is also exempt. Amount charged by cord blood banks. Guys, this is an amendment. Earlier, this used to be exempt, but now this is taxable. Amount charged for service provided by selectors to a recognized sporting body. Guys, selectors, everything on the ground, people who are players, umpires, referees, managers, all of them are exempt. But selectors, this service is taxable. So two services, 5 lakh and 5 lakh 20 are taxable here. Multiply with 18% and you'll get your answer. That is question number 2. Moving ahead to question number 2B. Examine the given cases and determine the person liable to pay tax in each of the following cases. Dharma Shastri, an independent director of Universe Private Limited, has received sitting fees amounting to 1 lakh from Universe Private Limited for attending board meetings. This is under RCM. So Universe Private Limited will pay the GST on this. Chandan Associates provided sponsorship services to Virat Cricket Academy. Sponsorship services, if the person who's receiving it is an LLP or a company, then it is under RCM. So Virat Cricket Academy LLP will be liable to pay. Legal fees is received by GABA, an advocate from Naveen Consultants having turnover 50 lakh in the preceding financial year. This guy's legal services also under RCM if it is a business entity. So this one is under RCM. So all three are under RCM in this question. Mother Oils has supplied machine oil and high-speed diesel in the month of April. As per details given below, Mother Oil is not yet registered. Determine whether Mother Oil is supposed to register. First is section 24. You will check that. Generally, you will check to interstate supply if they are making any interstate supply. Supply of machine oil in Delhi. So they are in Delhi. They're supplying in Delhi. No interstate. Supply of high-speed diesel in Delhi. No interstate. Supply of machine oil made by in Punjab and from its branch in Punjab. So again, there is no interstate. So section 24, there is no compulsory registration required. So let's check for section 22, where we have to check the limit of 40 lakh or 10 lakh or 20 lakh. But for that, we will need aggregate turnover. So let's calculate aggregate turnover. Aggregate turnover includes everything outside except IIGN. No inward supplies, no interest, no GST, and no non-taxable schedule 3. So supply of machine oil, should I include that? Yes. Supply of high-speed diesel, should I include that? Yes. Supply of machine oil in Punjab, should I include that? Yes. So the total turnover is 35 lakhs. Now let's see whether 40 lakh applies. First, pigs. For 40 lakh, check pigs. Are they dealing in prohibited goods? No. Are they dealing interstate? No. Are they only dealing in goods? Yes. And are they in those states of Putsam and Antimami? No, they're in Delhi and Punjab. So congratulations, the limit is 40 lakh. They've reached 35 lakh. So no registration required as of now. 6 marks for this nice question. Rajul is a registered software consultant. On account of ill health, poor girl, she's not well. She could not provide any services during the month of October. So on October, there is no supply. And if there is no supply, there is no liability. However, she had to incur all the expenses relating to her office. So she had to purchase a lot basically. She paid 75,000 to various vendors. The total input tax involved on the goods and services procured by her. So she had purchased on that, there is credit of 13,500. There is credit ITC. Out of the total bills paid by her, one bill of 15,000 relates to security services availed for security of office, tax on which is payable under reverse charge. The input tax involved in such bill is 2,700. So one of the purchases or one of the bills is regarding security services. Now security services is under RCM. They have on themselves said this. So that means you have to pay it under the recipient has to pay 2,700. So guys, supply leads to liability and RCM purchase also leads to liability. So can I use that 2,700 liability? Can I pay it using credit ledger? No, because it is RCM liability, has to be paid in cash. Rajul is of the opinion that the month of October, no GST is payable from the electronic cash ledger as she has sufficient balance of ITC. Actually, her opinion would have been right. had this been FCM liability, but this is RCM liability and hence has to be paid in cash. So do you think Rajul is right? No, Rajul is incorrect. So you have to explain that electronic credit ledger can only be used to pay tax which is payable under FCM, but RCM tax has to be paid through cash ledger. Discuss the ITC entitlement of a newly registered person under GST law 18(1). Under 18(1), there can be a person who is registered, voluntary registered, etc. On the stock, will you get credit? Yes. In both cases, yes. On the capital goods, sorry, you will not get any credit. But the stock has to be 1 year old. You have to explain all this in a theoretical question here. And if a return has been filed, how can it be revised if some changes are required to be made? Of course, when a return has been filed, cannot be revised. You cannot go back and revise, but you can make changes in whichever month the changes are required to be made, provided it is made by 30th November or annual return filing date, whichever is earlier. I've given 5 marks here because the exam also gives it like this. And remember, you don't need to write a whole page. You have to just explain your matter. And this is optional also. So you can choose not to follow this option, not to do question number 3 and solve question number 2 and 1 instead. Sorry. Yes, so you can choose to do 2 and 3 instead of question number 4. In case you're not comfortable with theory, I gave you a taste of this entire paper. Guys, watch this video whenever you finish writing the paper. All the best for ICAI paper. Reach out for any questions. And remember, Monday night is a problem or a doubt solving every Monday night. All the best and see you soon.